So how about Singapore compared with the New Zealand? Yeah.
Well, there's not a lot of food in Netherlands. Like there aren't just as many choices I have here.
Cool.
I'm enjoying it so far.
Yeah.
So far, so good.
Cool. I'm also looking forward to Singapore now. A beautiful city, but I have never just have in touch with that. Yeah.
It's a bit hot here.
Yeah. Well, this summer, everywhere is so hot, right? Except for the New Zealand, it's winter now out there. Yeah.
New Zealand and Australia.
Yeah.
Singapore
But
is
Australia. Yeah. But so it's always cold as I said, full of the rain, maybe snow. When I was in there about 2 years ago, it's always like that at this time.
Okay. I've never been there. I have never been to New Zealand.
You can just have experience on there, maybe 2 or 3 months. It's a beautiful place in the world, I think. The greatest and beautiful place in there.
Yeah, should go there. We have an office over there, actually.
No. You mean Bybit? Yeah. I know that. Yeah. I know that because I just hear from about. So what's this office mainly for? Just sales, or maybe have some quants teams on there?
Some developers and regional team.
Regional team, okay.
Like regional team who's in charge of all the business development and day-to-day business operations.
Okay. So many users out there, or just?
We categorize New Zealand and Australian users as English speakers. So count specially how many users are in each of these regions.
Okay, that's right. Jay, could you hear me? Check.
Yeah, I can hear you.
Okay, cool. Sohan is here. Hi, Sohan. How's it going?
It's good.
Hello.
Hey.
Okay, let's wait 1 or 2 minutes, waiting for the Darius, and I don't know where is him.
Sure.
Okay, Darius is calling here and just waiting for 1 or 2 minutes. Maybe he's trying to connect with us. Yeah.
Yep.
Hi, Leonard. Hi, Leonard. Darius, okay, right? Sorry, we just need to wait 3 to 5 minutes with our one last guest. He's trying, maybe has some issues in the connection, and we will just wait him for for several minutes, and he'll come here soon. Yeah, just wait to wait several minutes. Yeah.
Okay.
Okay, now the last one has come, and so how's it going, Darius?
Hey, sorry, I was I joined the call earlier, but maybe it was something wrong. Sorry, guys.
That's all right. That's right. So let's start now.
Sounds good.
Yeah.
Okay, so first things first, thanks to you all for your participation today, and we are delighted to invite Hao Yang from Bybit, Sohan from Paradigm, and Darius from QCP to discuss and communicate with with our community members in the AMA. First of all, please let me introduce myself and Blofin. My name is Aiden, the Blofin's macro and relative trader, and Blofin is a data-driven financial asset management institution aiming to provide customers with safe, convenient, and professional crypto-fied financial services. And the Blofin team consists of core member talents from best worldwide universities and Wall Street institutions. Blofin has dedicated to ensuring the compliance by already maintaining its USA federal MSB license through FinChain, the IMA, compliant fan license, and also is also working on obtaining additional asset management license in Hong Kong, Singapore, and Canada. Blofin has been recognized by top global investment institutions, including SIG, Matrix Partners, KuCoin, and Dragon, Bush Capital, with multiple successful rounds of secure financing. In 2021, Blofin's asset management has still have reached $300 million, while the annual trading volume has exceeds $100 billion, and it has more than 150 quantitative trading teams and more than 20 strategies are running. And Blofin has a world-leading quantitative trading database and strategy library in the crypto market, and with more than 2 years of complete crypto trading data, and has also reached close cooperation with famous international financial institutions such as Blocks, Signature Bank, Binance, and NAV. And this is critical period for uptrend of the crypto industry. Blofin has constantly expanding its asset management skill, and the management skill will reach the level of $1 billion at the end of this year, and Blofin will provide users with consistent, compliant, and reliable services in the asset management, market making, and other businesses. So you're welcome to search for the Blofin from Apple's App Store and Google Play to download and use it now. Okay. Now let's welcome guests, and could you introduce yourself, Hao?
Sure. Yeah. Hi. I'm Hao. So I'm currently the head of options at Bybit, who are trying to build a linear options platform, and we are already live for almost a month, and our volume is picking up. So before Bybit, I worked as a options trader for 2 years, and then I also traded energy products for 2 years. Started dabbling in crypto in 2018, and I initially started trading crypto options in 2018 as well. And then I had an opportunity to join force with Bybit to create another like equally powerful options platform. And so here I am.
Okay, cool. Thanks, Hao. And so, Sohan?
Sure. Hey, guys. Great to meet you all. So my name is Sohan Sen. I'm the head of the Asia institutional sales business at Paradigm. I come from a options background, but in TradFi, in sales and in structured products. I moved over to Paradigm last year, and I've been trading crypto for a couple of years now. Just to give you a brief introduction of Paradigm, we are the largest liquidity network for crypto derivatives, particularly options. So our model is that we always try and create liquidity by connecting clients with liquidity providers, while we always remain non-custodial. So we always settle with an exchange partner like Bybit, or now we're also settling in DeFi. So about 30% of the CeFi options business currently goes through Paradigm, and generally we're used by most option players, especially when you're dealing in multi-leg structures. I'll stop there.
Cool, thanks, Sohan. So the last one, Darius, could you introduce yourself?
Sure. Hi everyone, and thanks for having me on. So we were actually the first ever trade on Paradigm. I'm Darius. I'm the founder of QCP Capital. QCP is a full suite crypto trading company. We trade prop, and we do market making as well in spot and spot and other products, especially options. We were very early in that space. We market make options, crypto options across exchanges, OTC. And as well as DeFi. So I think we are primary market makers there. Sohan, correct me if I'm wrong, but I think we've been number one on Paradigm for the last couple of weeks.
Yeah, that's right.
Yeah. So we're very active in DeFi as well, the DeFi option vaults. And we also do investments across the space, but trading is our core business, and particularly option trading is a core expertise of ours.
Cool. Thanks, Doris. So now let's start. The first question is about the tariffs, which has been concerned by all of the investors for about more than 1 month. Yeah. So since the tariffs collapsed, it's been a while, but its aftermath has remained in the crypto markets, not only in the price, but in its confidence, in the market confidence, right? So then the Luna event brought the most considerable exposure to the crypto market since May in the 2021, and resulting in enormous losses for retail investors and institutions. So how do you have any exposure on the Luna and or UST in this event? Which risk could have been controlled and which could have been hedged in your mind? Yeah.
Okay. Yeah. To be honest, I was never a Luna or UST investor. I wasn't paying attention to Luna until I started to see there was a depegging happening on UST. In the beginning, there was a little a spread between the UST and USD. Like the UST is trading 0.98 against USD, right? And then there are market rumors about how a whale started dumping UST on the Curve platform, and how the pool start to get imbalanced. And then that for me is, as a trader, that sounds an alarm for me. Like there could be a potential depegging event. And you know that the Luna and UST is trading around 10 billions. If that thing happens, if that depegging event happens, it could have a huge impact on the entire crypto ecosystem. So for me personally, it's a risk that we as a Bybit have to take into consideration and manage. We have to take precautions. Like we have to pay attention to our insurance fund, pay attention to our open interest, and what's the potential impact if depegging really happens. So that's from our perspective, we have to pay attention to. But from me personally, when I see that there's a chance that UST gonna depeg, and the possibility of depegging is bigger than 2%, that's the premium that USD is trading against USDT, right? So for me, that's an opportunity to get into a positive expected return trade. So what I did personally on my personal account, I just shorted UST with my personal money, and the payoff is like, if I lose, I probably lose 2%, and if I win, then probably win over the entire notional of my investment, because when the depegging happens, it's probably gonna be a cascading severe event that could really dumps Luna to close to a zero price level. So as a trader or as an investor, if you see something happens like that, I think the best thing is to evaluate what kind of risk or expected return you are facing when you are facing a trading or investing opportunity. And obviously, I think to hedge your positions when such thing has the possibility to happen is the right trade to do. You can obviously do it with futures, or you can also do it via options. And the best thing to do it with options is that before the depegging event happens, the options are generally very cheap. Like the implied volatility of options does not take into consideration of the depegging event. But when depegging event happens, you will see a huge spike in the implied volatility of options. So if you're in the right trade, like if you buy a put options, it does not only mean that you're in the right track of direction, you're also on the right side of the volatility spike. See, that's the interesting part of trading options versus trading futures. you have to pay attention to the implied volatility. Also, you have to pay attention to the direction. Yeah.
Okay, good points. Thanks, Hao. So, Darius, what do you think about this question?
Yeah, I mean, this is a question that was quite relevant to us because unlike how we were actually Luna seed investors back in the day, but this is long ago, right? You know, we did trade quite a bit of Luna and UST on the book. But the thing is, you know, as seed investors, we actually had a direct line with Terraform Labs to swap USDC and UST at par. So, and in January, when there was a slight DPEG, you know, Terraform Labs actually cut the line. So, you know, I think that gave us a very early signal that that something was not right, and you know that there was some you know, lack of confidence in the peg. So we actually had cut our exposure already by then. I mean, you know, and so we didn't have any exposure into the actual thing. But you know, I mean, just to I mean, it was a sharp trade for how to short UST or Luna. But I would say that you know, if you didn't, you can't feel too bad, right? Because number one, it's good risk reward. I mean, it's, you know, if UST was at 90 cents and you short, you have a 10% downside, or and then, you know, have a big upside. But the funding was very expensive as well. So, you know, if you held the trade for a long time, you know, I think the funding was around 100%. You know, it was very expensive funding. So it's not a trade that you can hold for a long time as well. And I would share that some option market makers, I mean, we were long Luna USD puts, so, you know, that was good for us. But there were some market makers who were long Luna puts, but against UST. So, you know, that becomes a very strange situation as well. You know, I think probably one of the first times in financial history where you are long something, you are long a put that collapsed, but you still lose money because, you know, both parts of the pair, both Luna and UST, went to zero. So I think all around, you know, a bit of a difficult situation for everybody. Some of the bigger players had better information. You know, like us, we were lucky we managed to get out way before anything happened. But you know, I would say a difficult situation all around. And you know, for us, the opportunity was not so much in Luna or UST itself. But you know, the dislocations that happened outside of it, right? You know, there was impact on other tokens as well. There was impact on stable coins like USDT. So, you know, and there were opportunities on the vol curve. And you know, I think that's something that we can discuss as well.
Okay, cool. So thanks, Darius. And Sohan, what do you think about this question from your perspective of the OTC platform from the paradigm?
Yeah, well, I mean, for us, if you see this kind of tail risk event, you know, developing, right, and you've already made a good amount of money on trading Luna or being long Luna, I mean, the immediate strategy should be to just come out and buy a hedge in the options market, either the liquid options market or, you know, like if you can buy like one of these Luna hedges, Luna options, then that's great. But there are very, you know, like people, what we saw on Paradigm was that people just came out and started buying put spreads in very big size, right? So I think if you just think about it, if you think about the scenario of like you could pay 2% and get you know, like 100%. In options, that's there every single day, right? Like you can buy a 10-to-1 put spread, and if Luna collapses, then you will definitely make your 10 times, right? So like for example, at the early stages, you could have easily bought you know, a 2,000 you know, like 1,500 type put spread, you know, for let's say 1% or something like that, right, at the very start of the process. So I think the main issue, like from a Paradigm's perspective, is that many investors are just still quite reluctant to use options to help them in their speculation, right? So as in especially the buy direction, right? Like people are very happy to sell options, right? Like they're not as willing to just buy these tail risk options. Right, and that's especially because people don't view options as asymmetric, even though they are so asymmetric, right? Like if you own an altcoin and you think it's going to go up 10 times, you go and buy that, right? But then you should easily, maybe not buy all of your money into that altcoin, and you should just buy a call spread on Bitcoin, right? Because that if that alt goes up 10 times, it's likely in a bull crypto market, and then BTC is also up, right? So it's not just in the bear side, it's also in the bull side. Like, people should be using options a lot more when they're speculating on this, and that is the main flow that we saw on Paradigm.
Cool. And what additional risks can OTC handle for the investors from an OTC market perspective? What do you think about that?
Yeah, so I mean, the primary reason why people go to Paradigm is that we are able to facilitate liquidity for structures that aren't available on exchanges, right? So even now, there's still not a clean way that you can buy a call spread on most option exchanges, right, without paying bid option on both legs, right? So I mean, so we are able to facilitate that by connecting directly to market makers or like liquidity providers, and then clearing it as a block, right? So you get a cheaper price, right, because you're paying the net risk of the two legs or a few legs, and then you don't have any leg risk, right, because you're doing it in one go. So that, I think, is the main reason why people come and choose to use Paradigm. But the other very simple reason, I would say, is that the liquidity network that we have built up is quite substantial. So pricing, can be, attractive on us, even if, even if you think it's a very big size and those kind of prices don't exist on the exchange, you can definitely ask us, and then you might be able to find those by us.
Cool. Thanks, Mike.
Yeah, I have a question. Like, in the face of a complex event like the terror crash, options are currently one of the more appropriate tools for hedging against the various risks in the crypto market. So, taking this event as an example, which option strategy are suitable for hedging these risks? What do you think?
Yeah, sure. Like as Sohan just mentioned, there is a lot of put spread volume and flow happening on Paradigm. I think put spread in this case is a very good strategy. So when you're buying a put, you're obviously paying the premium, right? That could be huge, but you can obviously sell a higher or lower strike put to compensate for the premium you paid for the first leg. And then when you enter a put bear spread, then you're paying for less premium. And the downside is you also capped the upside and total return potential. But it's also a choice between how you can manage the risk and return with options. The interesting about options compared to a linear products is that you can build customized risk and return structure with options. I think that's one of the major advantages of trading options versus trading futures. You obviously, when you enter a options position, you can build the desired risk return profile on your options structure. But with futures, you can only manage the notional or the total size and the leverage that you want to invest. This is not as clear as options in terms of risk and return estimation and perspective.
Get it. Thank you for sharing your opinion, Hao. So what about you, Darius? What do you think are the...
I mean, there are many ways to do this, right? There were a lot of, I mentioned there were quite a lot of opportunities here when these things happen, because you have a lot of mispricing and dislocations in markets generally, especially when such a big event happens. A simple one is like the guys mentioned, you buy a put spread. That's a cheap way to buy to buy some hedges. Another way is you can do risk reversals, right? You buy put, a sell, a call. That way, it could be cost free as well. So you have a free hedge, so to speak. You just have to give up upside if you're long. And there were a lot of people were doing risk reversals. So if you look at the skew when that event happened, right? Puts were generally about 20% more expensive than calls, which is quite a high level. And I would say that was probably one of the largest, or rather the most popular trades that people were putting on this risk reversal. And in crypto as well, I think another trade that would be useful, if you buy low delta puts, so in that case, instead of buying a put spread like 2,000 or 2,000, buy a put 2,000 put and sell 1,005 put like Sohan mentioned, you could always just buy let's say a 1,000 strike put in like September, right? I mean, even if like Ether doesn't get there, because the market has fear, it will start pricing in a lot more probability that it gets there, and that strike becomes a lot more expensive. So these are some of the things that we were doing, right? We call it long the tails because you are buying the tail risk of an absolute collapse. So yeah, risk reversals, long the tails. What else? And of course, when there are dislocations, you have arbitrage opportunities as well. Arbitrage opportunities happen in some of the stable coins. But generally, if you're talking about options, I think they probably had the best opportunity for yield as well. I mean, even if you're just looking for yield, right? And let's say you're a long coin, you can always sell calls, or you can even sell naked calls, right? So, in the time when TVL departed, left DeFi, I think it was a good opportunity to get some use out of the option market. So either hedging or doing some zero cost structures, or selling some calls, and if you're bearish, that's a yield play. Another play that will work quite well for us is some of the exotic options as well, right? So if instead of, I guess this is a bit of an alternative to a spread. You can do a reverse knockout, which means if you think that prices are going to collapse but not too far, you can sell. Let's say in this case, let's say if you sell a 2,000 put, buy a 2,000 put against a 1,000 knockout, right? So you cheapen your put a lot, and you only get you have a long put, but it will get knocked out, or rather the option will get eliminated if Ether expires below 1,000. So that way you actually cheapen your option by about half. So that's one way you can do things as well. So quite a few ways to do things. And like I said, there were, if you observe the option market, if when the risk reversals go that low, another trade you could do is sort of fade that as well, by buying calls, selling puts, depending on what your risk appetite is. So and that's probably a more mean reversion play in the vols. So quite a few things to do, but I think simple stuff, for carry, you can sell the opposite sell the opposite direction, meaning if you're bearish, you can sell calls. If you're bullish, you can sell puts just for carry, or sell a put spread. And if you're willing to pay, you do a spread in the same direction. And if you want to hedge without cost, then you can do a risk reversal. So the options market offers up quite a few variable structures that you can put on. This is definitely not an exhaustive list, but I would encourage everyone to explore what kind of structures you can put on. And like Hao said, the great thing about options is it's customizable, and you can adjust your risk, your upside and downside, as and where you want to play it.
Thank you, Darius. It's really informative. Griffin, it's your turn now.
Okay, so let's back to some basic questions. So, I believe that the most investors would like to use options when they realize that options is a powerful tool against risk, that the understanding of the crypto options is relatively limited. So, Darius, the first question is for you. And could you just briefly describe the differences between the options and Delta One contract products, such as the futures and the perpetual contracts in the crypto market? The differences, yeah.
Yeah, I mean, it's fundamentally different. with Delta One, you buy and your risk either way is sort of 50-50, right? You buy at a certain level, it goes up, you make money, it goes down, you lose money. With options, the risk is a bit more asymmetric. Buying an option brings in leverage for one. So you pay a premium, but your upside. So you pay a premium, which is your full downside, and your upside could be unlimited, right? So it creates leverage because for the same amount of risk, you could get a much bigger return. And because of the way options are structured, you are bringing in path dependency because options are not something that lasts forever, right? So you have an expiry in options. You are bringing in a lot more factors. If you have a very specific view, options can be structured to express that view. So I think like I mentioned earlier, very customizable. You are basically creating a second order derivative, so it allows you to do a lot more things than you can with spot, right? So for spot, if you're doing like perps or forwards, all you have to care about is direction and the funding cost. For options, you have the funding cost, you have expiry, you have puts, calls, payouts, you have exotics. So it basically allows you to customize your payouts much better, and also reduce costs or even earn carry if you structure it properly.
Cool, thanks, Darius. And so, how as a trader, what are the advantages of the option products in the bear market? What do you think?
Well, it's a tough question. So, one thing I want to say that when you're trading options, you're not only gambling on directions or betting on directions. There is another layer, like another dimension that when you're trading options, you have to consider is the volatility. It's the implied volatility versus the realized volatility. So when you're trading options, besides the directions, you also have to consider whether the option is too expensive or too low in terms of realized vol or implied vol, right? So generally, as a market maker, when as an options market maker, they don't care too much about the directions. They price options in a market neutral way. So the only thing they care about is the volatility, how much the market is going to move in the future. So that creates a interesting situation where market makers, they only care about the volatility. But as a options trader, when you are betting on directions, you are basically trading on a different dimension comparing to the options market maker. So if you think the market is going to drop or in the future it's going to be a bear market, obviously, if you have that information or for sure, you can just buy a put option or buy option structures that gives you a downside exposure. And the interesting is the market makers, they don't usually price in, how the market is going to move. Well, they don't price in the direction of the market. So that creates a situation where it's possible for the options buyer and the market maker to be both winners. That's, I think that's one of the advantages of trading options, be it in a bear market or a bull market.
Okay, thanks, Hao. So, but the volatility, for the retail investors, we just trade directions. But for the market makers, you do the so-called volatility trading, right? But volatility. So the profit potential and risk for the volatility risk is what? So could you just do some brief introduction about that? The profit potential and risks for the volatility trading and in the market maker perspective, yeah.
Okay, sure. There's a thing called replicating and dynamic delta hedging. So that's what every options market maker will do to eliminate the directional risk. So when you're constantly hedging your options positions via trading perpetuals or futures or spot, you're basically eliminating direction exposure, right? But also, the pricing of an option, there's one thing that nobody knows what that is. It's called the volatility. So the volatility perspective cannot be eliminated via the process of dynamic delta hedging. You're still exposed to the volatility perspective. For example, if you're an options market maker, you have a long gamma position, and you're long vol. That basically means you're long vol, and the realized is much lower than the implied. And if you're long vol, that means you'll probably lose money. And on the other side, so if the realized vol or the future realized vol will be much higher than what an option is currently priced, as an options buyer, and you constantly do delta hedging, then when the option expires, your expected return would be related to the realized vol minus the implied vol times Vega. That's how much money you could expect it to win. So for an options market maker or for a volatility trader, there are two things you have to take into consideration, like how much realized versus implied will be in the future, and what is your hedging strategy.
Cool. It looks so impressive. And for Darius, from you.
I agree with what Hao said. I think that's how we do things as well generally. But I think one thing I would add is, we've been through quite a few bear markets. We've been in the space since 2016. We've seen 3 bear markets. I think the key thing about bear markets is, it actually creates it's a scenario where sometimes yield is hard to find. So if you recall, if those who've been in the space long enough recall, like in 2019, 2020, the forward curves in crypto were actually in backwardation, meaning that they were discount to spot, right? It's not a situation like now where everyone assumes that the forwards are always in contango, which means there's positive yield in the space. So it's positive yield for dollars, right? If you buy spot and sell the forwards, you get a return. It used to be the other way around, right? And in a bear market, and if you're starting to see signs of this, right, yield is a lot harder to get by. So options become actually one of the key places for yield, right? Especially now, we're talking about DeFi, where a lot of the yields have been compressed, and a lot of the returns there are hard to come by. Options becomes a place that provides this yield, because the yield from options comes from monetizing the underlying volatility, the volatility of the underlying asset. And in a bear market, you tend to see quite a bit of big volatile moves as well. So it becomes a good place to generate yield. And also advantages of options in the bear market. It becomes very good for hedging, because in a bear market, you are more wary of very sharp moves, right? Both up and down, right? So options becomes a very good way to hedge some of these risks. So I would say the key advantages are really source of yield for guys who want that, and also it's probably the best way to hedge, especially if you are holding a long position and you want to hedge a downside. I think options becomes the most effective way to do that.
Cool. Thanks, Darius. And so let's move to the next question. So by the way, Hao, Bybit's USDC options has been live for some time now, right? Could you introduce the difference between the USDC margin options and the coin margin options?
Yeah, sure. So we spent quite considerable effort to build a functional, well-built USDC margin options. So the difference between a normal option, which I call the USDC margin options, is that everything is priced and settled and margined with stablecoin, just like traditional finance. But coin margin options on the other hand, that trades on the coin itself. So for Bitcoin options, your margin, your pricing, and your settlement is all in Bitcoin. So that creates asymmetric downside, actually. So when you're trading Bitcoin options and when you don't hedge your collaterals, that creates an interesting situation where the entire market drops, and then if you're in the wrong direction, your collateral drops in value, your position also drops in value. So that's a double kill. Also, from a margin calculation perspective, obviously you have to use portfolio margin to trade options efficiently, but portfolio margin calculation means that you have to scan the scenarios to find out the maximum loss, right? For coin margin options, you have to price every scenario in Bitcoin terms. That actually is not as efficient as calculating all the stress scenarios as USDC. For example, when Bitcoin drops 15%, the margin required for the 15% drop is maybe 1.5 Bitcoin. But for USDC, it's always the same. It doesn't have the curvature as the coin margin options. So trading with USDC margin options, you actually reduced a layer of complexity and reduce a layer of curvature from already complicated options market. I think that's one of our major advantages over all our competitors. I think we are the only one who will have portfolio margin, which will launch in 2 weeks and settled in USDC. All the other competitors, their option offering is coin margin options.
Cool, thanks, Hao. So to be honest, I have always had a question. There's one product with the stable coins as margin, like the USDT margin perpetual contracts has been on the market for a long time, about I think 2 years, yeah. But why did USDC margin options not appear until nearly 1 year ago, like the Darius exchange? What are the implementation problems and the difficulties on there, and how Bybit solved it?
Yeah, as I mentioned that, when you're trading options, you have to choose a stable settlement coin, like stable layer of, risk management. So USDT is, sometimes it's not one-to-one pegged to USD. Well, it most likely is due to market irrationality and fear, but nonetheless, USDT still fluctuates against USD. But USDC, on the other hand, is most of the time since the beginning of its issuing until now, has been a strong market consensus that USDC is always one-to-one pegged to USD. So for us, from our perspective, if we choose USDT as a settlement coin, like a denomination, then sometimes it's difficult to calculate and to convey how much settlement value should be when you're trying to settle a Bitcoin option, especially the underlying is Bitcoin USD. And we eliminated that problem with settling on USDC, and we even set up, a very good relationship with Circle that we can always guarantee USDC is one-to-one pegged to USD. So we have high confidence that our settlement and our pricing is exactly as intended without fluctuations.
Okay, great. Thanks, Hao. So Sohan, as an OTC trading platform, so what new opportunities and the challenges does the introduction of the USDC options bring to the paradigm?
Yeah, hey guys. So I think from our perspective, of course, we welcome it, right? Because to have a dollar margin option exchange automatically means that there'll be a lot more flow which takes place in options, right? So as an example, like if you just look on Bybit, you look at the dollar settled future versus the coin settled future. The dollar settled future is way more has way more volume, right? So you extrapolate that to options, and you can see that that should mean that the options market should become a lot more liquid. A lot of new players should be in there because they can actually get fixed dollar payout. But I think even more than that, I think there's a value that exists, which is the current offerings in the coin settled exchanges. You're not able to hedge with a very liquid future, right? In this particular case, you can hedge with an extremely liquid future, right? Which is very valuable to market makers as well, right? So I think this innovation, which of course Paradigm will be able to integrate to offer this, but I think it's a big win actually for the market makers, because when they are dynamically delta hedging, I think it's much easier to do with a big exchange with a dollar settled future, and also the fact that it's just a very big exchange where you can do spot.
Okay, cool. Cool, thanks. And so, CJ, it's your turn. Let's talk about some structured product. Yeah.
Okay, so let's move to the structured product now. So there are very few products in the crypto market that can achieve higher annualized return recently. However, from mid-2021 to the present, structured products based on covered call and put selling strategies are becoming the first choice for both on-chain and off-chain crypto investors because of their relatively high expected returns. So, Darius, could you briefly describe what structured products are typically available in the crypto market, and what risks do crypto structured products usually have that investors need to pay attention to, and also which structured products are suitable for retail investors and which are ideal for institutions?
Yeah, I mean the typical easy one is a covered put or covered call, right? Cash covered put or covered call. So meaning that if you're a long coin and you sell a call, it's relatively safe because the worst that can happen is you get exercise on your call and you take profit on your coin, you sell the coin. And likewise, if you have cash and you're already looking to buy Bitcoin or Ether, you sell a put. The easiest is relatively risk free because the worst that can happen is when coin price drops, you buy at a level that you were willing to buy, and while doing so, you earn a pretty high yield as well because you get option premiums. So that's a very vanilla strategy. I think one thing to note is that one tricky thing. I mean, there are a couple of tricky things here. Firstly, is the scenario that I just described. Works for physically settled options. So if you are doing OTC with a market maker like us, and you are selling a call against your coin, and if you're selling a put against your cash, it's very simple. You if your option gets exercised, you either sell a coin or you buy the coin. Most DeFi options as well as options on exchanges are cash settled. So you actually have to do that part yourself, meaning that if you had sold a put on Deribit and your put is getting exercised, what's going to happen is you're going to just lose the P&L, which is the difference between the settlement price and the strike price, and then you would have to buy the coin yourself. So you have to manually do it yourself. So that's one thing. Another thing that is dangerous, of course, is leverage, right? If you take too much leverage and you're short vol, you could get stopped out. So while the option market is attractive, it is also it's also open to leverage. So you need to watch what kind of leverage you're using, the margins you're using, and you need to be aware of how the settlement is being done. In which case, you need to be aware that in which scenarios you start to lose money, and in which scenarios you can get stopped out as well. So a lot of money to be made in options, but you do need to take some time to get to know the products and how exactly, and the devil's in the details, right? How exactly they're settled, how's the P&L taken, given, And what are the mechanisms where when it comes to expiry and exercise?
Yeah, can I add something? Like, we are, as Bybit, we're actually rolling out a cross margining system. Like, you can use Bitcoin and Ethereum to trade USDC options. And when we enable that, the next obvious step is that we will gonna enable physical settlement for options. So that means when an option settles, and if you have enough margin, then we just convert your options into Bitcoin so long as your equity value still remains positive. You may enter into a debt of USDC, but as long as your equities remains positive, the options can be settled into Bitcoin or Ethereum. That's one of the things on our roadmap, and we're building it.
Thank you, Darius, and thank you, Hao. Sohan, I have a question for you. What role do over-the-counter trading platform like Paradigm generally play in structured product today? Will new features be added in the future, or such as over-the-counter exotic option trading or anything else?
Yeah, sure. So we do have ambitions to go in that direction. Right now, the first step that we've taken in that direction is to integrate with the DeFi option vaults, like the Ribbon vault. So that means when you have this covered call that Darius was mentioning, you can actually trade that via Paradigm, right? So that was the first step in the more complicated like structured product offering. Actually, we did an auction today, and actually Darius won that. Last hand price.
Yeah.
So congrats. But I think the interesting thing is that for us, like what we need is for a option exotic market to become liquid and to be clearable somewhere before we are able to trade that on Paradigm. So the reason why options have got so big on Paradigm is that we are able to, you can trade that option and then you can clear it somewhere, right? As long as these exotic options, like the reverse knockout type stuff is being traded as a peer-to-peer OTC, it is more difficult for that to be traded on Paradigm. But then one day, if, for example, Bybit offers, a reverse knockout on the exchange, then of course we'll be able to trade it then, right? The other thing is if we start seeing this kind of payoff in DeFi, then of course we will be very active in providing a liquidity network there.
Thanks for sharing, Sohan. So I have a follow-up question for you. Like, given the current market condition, are there some good strategy that you can share with the audience?
Yeah, sure. Yeah, I mean, actually, if you go to that page, the one which, like the one before, which shows the Paradigm platform, I think I put in a few trades which which kind of I thought looked good, right? So this is available for anyone to trade, right? And the first two are call spreads, and the last one is a put spread. Just to demonstrate how easy it is for people to trade these instruments. So what we saw in the first leg of this kind of risk off move was that people would come in and they would buy deep out of the money call spreads, right? So if you look at the first one, that's a 30th of December call spread, which is 4,000, 5,000 in Ether, right? So it's basically you're betting that it'll go to another historic high by the end of this year, right? But that's a trade that pays something like 20%. And you have to pay 1.7%. So it's over something like 15 times max pay, right? So the thing with dealing with a trade like that is that you get a massive amount of leverage if things mean revert. So a lot of people were doing that, right? Instead of going long cash, like going long on a future or a perp, or going along with the coin, you just replace it with an option, and then you say, look, if it pays out, then great, I'll make a lot of money. If it doesn't pay out, then I just lose the premium, right? The second trade was the people that I mentioned who came out and started doing put spreads, etc., to hedge their tail risk, right? Yeah, exactly that. So if you look here, you can basically see the very common flows where people are just coming out and buying 1 week put spreads, right? Just to protect against the risk that there's a meltdown, in the market. Because a week, if you think about it in options, like normally people say, look, you should be buying like a longer dated option, 1 month, 2 months, etc. But if you think there's a risk that you could really get hit, from a very large move, why not just come in and buy a 1 week option? 1 week is a long time in crypto. So so those are the main kind of flows that we have seen. Later on, I think there's a more interesting trade I think we can go through as well, which is a butterfly. But I'll leave it there for now.
Okay.
Oh, I can go if you want.
Okay. Go ahead.
Yeah, I can go now if you want. So this for example is a butterfly, right? So it's basically you buy 1 call, you sell 2 times call, and then you buy which is more out of the money, and then you buy another call back, which is at the further out. So it's a limited downside strategy. So you can't ever lose more than your premium, but you get this kind of like shark fin type payout. Right. This is really a very interesting strategy because unlike the call spread, right, where you have to pay a lot of, you have to pay a good amount of premium to own that call spread, here you're kind of guessing the exact range of where things are going to be, right? So in this particular case, if this ends up at 3500, you make significantly more than something like 20 times your initial premium. Right, so it's a very levered play, but this is quite popular these days. So this is if you have a very strong view on a range in options, then you can do this kind of strategy.
Thank you, Sohan. It's really informative and inspiring. So how about you, Hao? What do you think are the good strategies that you want to share with the audience?
Well, I think the great thing about options is that you can customize the payoff structures you want to use, like Sohan just demonstrated. That's just a few of the structures you can build with options. There are many more exotic or structures that you can create with different combination of options. What I suggest everyone to do is just, maybe play around and see how your structures or the expiry payoff would look like and find out what's the most suitable strategy for you. And for different people, they may have different tastes, right? Like, even if you read the same book, 1,000 people would have 1,000 opinions on that. So probably the best thing to do is just play around and see what's the best thing suits for yourself.
Yeah, I agree. Thank you for sharing your opinion, Hao. So, Darius, what do you think?
Yeah, no, I think it's easier to share what trades I actually have on, right? So the trade that I've had on for a very long time, for a month or so already, has been long the tails, right? So it's similar to what Sohan mentioned earlier. You long the very fast strike options. So these options are the most sensitive in terms of P&L to big moves, right? So being long the tails is always good in an environment where prices could gap or prices could move very quickly in either direction. That's one. The other one that we have on is we are along the risk reversal, or rather we are skewed to the top side for the risk reversal. Like I mentioned earlier, the risk reversals are very, very negative, meaning that the market is paying a lot more for puts than they are for calls, and it's at a level where I think it's starting to get a bit unsustainable. But this is a bit more of a market maker trade because when we put it on, we are delta neutral, so we are only playing the skew. So I am basically short spot and short puts and long calls. and I'm constantly making sure that I'm constantly trading spot to make sure that the delta is neutral. But the play here is that eventually the puts will get relatively cheaper compared to calls because right now they're too expensive. So that's one trade I think we have on as well. And in the last 2 weeks, we have also done a steepener. So the thing that it's been a very interesting market, right, where BDC vols have typically been around 70%, Ether around 80%, and then even when we have a huge move, the vol goes above 100, but it doesn't last for very long, a couple of days, and it comes back down. So the market is, I think positioning in the market is, the market makers are quite long ball, right? So whenever it spikes, they sell as well. So one interesting thing also is that the curve is flat, meaning that the vol levels for 1 week, 1 month, out to 3 months are relatively the same. So we think that there might be a underpricing of future vol, given the macro situation, given the possibility of an EVE merge, the vols in the future should be more expensive than the front. That the vol curve should be steep, meaning that the front end vols should be cheaper than back end vols. So what we have on is a steepener. We are selling front end vols, especially when it spikes. So we are selling the 1 week up to 1 week and 1 month, and then we are buying back end vol, which is the September, December kind of vol. So the play here is expecting that things, so I mean, if there's a big move, we are fine because we're covered, we're sort of neutral because we're both long and short, the same strike, so we have a sort of calendar on. But the expectation here is that we are moving towards a higher vol environment. So into the end of the year, as we have more, as the Fed starts to take more action, and then we start to see inflation playing out as well. We expect that the vol will increase going forward. So we have this steepener on short the front end, long the back end. So these are the core positions that we have on ourselves.
Thanks, Darius. So next, let's turn the focus back to Bybit Griffin.
Okay, cool. Thanks, Jay. And so, how, as a new competitor on the crypto options market, from your perspective, what's the opportunities and challenges for the options business in the crypto market? And what crypto options related products will you launch? And what grades and improvements will be provided in the future?
Okay, yeah. So first of all, let's talk about opportunities. Currently, there isn't a lot of options marketplaces. We have only one legit competitors, but the volume being traded is still on inverse options. As I've mentioned, that it's difficult to manage the risk, and it's even more complicated to understand when you margin everything with Bitcoin. And the account system over there is really separated as well. So you can only use Bitcoin to trade Bitcoin options and use Ethereum to trade Ethereum options. What we're trying to do, an opportunity, a window it gives us is that we can create a unified account system that not only we enable portfolio margin within Bitcoin options and Bitcoin perpetuals, but also we allow P&L offsetting between Bitcoin and Ethereum derivatives. So basically, when you have USDC in your USDC account, you can trade both Bitcoin options and Ethereum options or Solana options, and it all happens within the same account. So basically, some of the very interesting trade that you were not able to do, you can do that right now. For example, volatility spread trading. If you expect the volatility between Ethereum and Bitcoin is too much, is diverging too far away, then you can build a offsetting position, for example, short Bitcoin vol or long Ethereum vol and expecting a converge. And you can do that right now. You can do that on Bybit, and you're not able to do that on anywhere else because the account system is not integrated. But here, that's for the first time in crypto options history that you are able to do that kind of trade. Obviously, that's the opportunity we have, at this stage. Also, the challenges right now, options is very difficult to understand. And I have to say there's a high switching cost from one exchange to another, different APIs, different risk system, different account. So the challenges we face is, to convince the others and let the market know that we are a aspiring competitor with a well-built product and, functional or powerful technology and IT setup that would meet all the traders' requirement for, trading options. And basically, we have to convince the other people that the trading on Bybit is a better choice for them, and the liquidity will be better, the account system, risk management system will be better, and our IT and speed will be better. That's all the things we need to convince the market, and it's not an easy job. That's the challenges we face, and talking about related crypto options products. So as I mentioned, we'll be trading everything in a single account. And so long as we have this infrastructure built, there are a lot of things we can do with it. For example, issuing structured products on Bybit, or cooperate with Paradigm to build a automatic structured products selling vault that people can invest directly with yield generating structured products, and it's all based on our powerful infrastructure. So there are a lot of things that we can do once we have this infrastructure in place. The imagination is sky's the limit. We'll just keep continuing polish and improve our infrastructure, our products, and we'll be offering the entire market more innovation and more efficient trading system and more opportunities to customize, to build your structured products and generate more yield. And we believe we can do it more efficiently than all of our competitors. That's all the roadmaps and plans we have in mind. We're getting really ambitious and cautiously optimistic about linear or normal options product.
Cool. Thank you for your great answer, Hao, and we are looking forward to the Bybit's future performance in the options market. And now it's time for Q&A. If you have any questions, by audience, and you can ask our guests about options, risk management, and you can ask our guests as you wish every questions about the topics. Yeah.
Actually, I have a question. Sohan, I just saw you guys actually facilitated the first DeFi vault trade. Is there any difficulties or differences between trading on a DeFi platform comparing to trading on a CeFi platform?
That's basically the ribbon vault that the QCP won today. So it's the second such trade that we've done. So the difference is obviously that everything is on chain, right? So it's not like in a normal exchange, you just have a block trading API and then you can settle with that exchange. But here you have to do everything as a smart contract on the chain, right? Like so on the actual blockchain. So it's not it's the blockchain side which is much more difficult to do, which is the complexity. But the good thing is you can, because you're bidding on these options, you only have to pay the premium, right? So once you connect your wallet to Paradigm, you go through the approval on your MetaMask, and then it takes a few minutes, and then you can bid on a very large size of these options, because you only have to pay the premium. But the problem is, of course, that you can't do any kind of netting the way you can in a CeFi exchange. If I buy a call and then sell a call, or if I buy two calls, there's no delta hedging, there's nothing like that, right? So it's still a kind of somewhat primitive structured products in that sense.
For now.
Yeah. Soon there'll be more.
I'm curious. I mean, so what I believe the TPS, the speed, the efficiency on DeFi platform. What do you think? How are they going to improve on that perspective? It's already very difficult to build a risk offsetting system on the CeFi platform.
No, how the thing is with these vaults, all the settlement is done off chain. So the option is done, by Paradigm. Actually, Sohan, correct me if I'm wrong, but that's actually off chain as well. It's the settlement that's on chain, but the bidding process is completely off chain.
Yes, so the liquidity and matching is off chain, but the settlement is on chain.
Okay.
Yeah, so I think the option vaults are in a sort of nice spot, because the stuff that needs to be off chain are off chain, and then the stuff that like settlement and collateral management, that's on chain, right? So in essence they're not gonna be competing with you guys, because it's not an order book, right? It's an auction.
Okay.
The tricky part for the vaults is, the challenging part is going to be, of course, the part that loses to an exchange like yours or an OTC solution like mine, is that there's no margining. So the option seller actually has to put in full collateral, right? So because it's on DeFi, right? It's trustless, so it has to be full collateral. But I guess it works because these guys are yield seeking. So I think it's not a case where they want to trade in and out. It's more of or rather they don't want to leverage the position. It's more for yield. But the next step for DeFi options vaults has to be thinking around how to introduce leverage and collateral and margining rather, and also how to make the products more sophisticated. Because right now all the DeFi vaults are selling in the 1-2 weeks. So every market maker on earth knows that on Friday, whenever the vaults come in, there's $1 billion worth of selling in the 1 week. So you can always see that the 1 week gets smashed. So they have to start moving out the curve a little bit, and start creating products that have some buy vol as well to improve the payoffs, or be more creative with the risk reward payoffs as well.
Okay, thanks. So what kind of role can Bybit play in this? As you mentioned, that some part of it still have to settle off chain.
Bybit for DeFi options vaults. I guess you would know better for this, but I'm not sure actually. Yeah.
The difference between CeFi, like anyone who's trading these DeFi options is also trading CeFi, right? So it's, the main reason why vol is like so low is because everyone is buying these options in DeFi, from the vaults, and then they're using that to run their portfolio of CeFi options, right? So I think there's no like competing interest. They both coexist.
Actually, right? There could be integrations, because essentially, if somebody trades an option, let's say I bought the ribbon strike, right? On Paradigm, it's possible for, let's say, if the contracts are the same, that I can trade it off on Bybit as well, right? So I guess it's a bit of a novation kind of thing, where the contracts are intertradable, both on CeFi and DeFi. So I can buy it or sell it on DeFi, and then I can trade it on Bybit as well. So that's a possible integration, I think. So sort of fungibility of the contracts. If that makes sense.
That makes sense. Thanks. That's a good point.
Sorry, I have questions for the Sohan. So you just mentioned the DeFi was right, but there's some disadvantages about the DeFi was like you cannot do some legs or do some complicated strategies on there, just like they do some cost spread or both spread. So
You could.
I could. What?
You could, but it's just that you could actually. I mean, you could do spreads, you could do butterflies. It's just that the vanillas have so far offered the highest yield, and the protocols haven't ventured out to do spreads yet. So it's just a matter of them taking sort of taking time to structure it and you taking the effort to create these products. But it's possible.
Oh, okay, cool. So I think I can just looking forward to about just buying spreads and buying some more legs packed products on the product panel or on the yeah, right, yeah.
No, like I said, the main disadvantage of DeFi now is the collateral because it's not centralized like a Bybit or OTC shop like ours. The collateral needs to be on chain. So that's the tricky part, right? So if you're selling the options, you have to put full collateral. I think that's the biggest impediment.
Okay, cool. Thank Darius. And so there is the last questions for everyone, and it's just focusing on the futures. The Fed's June meeting is less than 2 weeks away. And we see current crypto markets just struggling to get out of the shadow and of the tariff collapse and the liquidity contractions. And how do you see the performance of crypto market in the period ahead? And what's risks and the opportunities does this mean for all traders, especially for the options traders? What do you think?
Sorry, what did you say was 2 weeks away?
The formal meeting.
Oh yeah, right, okay, yeah.
So what do you think about the formal meetings, opportunities and risks will just come for the crypto market? Yeah, and could we just find some chances, or just there is more risks that we need to just to mention to concerning? Yeah.
Maybe I can start. No, the market is getting a little bit edgy, right? And justifiably so. Risk is getting a little bit more tricky and a bit harder to manage. Given that it's become more binary, right? And also because and it was made worse with the whole Terra Luna situation, right? Where people are getting a bit more nervous as well. So no real easy answer to this. I think our view actually is that prices are probably a little bit oversold here. So we think that risk is actually possibly on the upside, meaning that markets could squeeze higher in the near term. And that's the reason why we position our book that way. But medium term risk, the concern of course is if we start breaking down and head towards break 20K in Bitcoin, breaking 1.5K in Ether, and we head towards the 10K and sub $500 level in Ether. So options are, and this is really a timely conversation because a very good way to hedge this is with options, right? But I think that there is that possibility. I don't think it will happen, but the market is starting to price that in, especially if monetary policy. I mean, if the Fed starts to get either too aggressive in hiking, or if inflation runs out of control. So that is the concern, that there's this big tail risk. But other than that, I think I've been quite encouraged generally by how well the market held out, even with the whole Luna incident. All the exchanges functioned perfectly. Deribit was working well, Bybit was working well, Paradigm was working well. If you look at other previous crashes, a lot of the exchanges had issues and lapses during the crashes. And this crash it didn't have. So that was one good thing. Infrastructure held up well. Number two is that when the Luna thing happened, I personally expected Bitcoin to trade to 20K, but it didn't, and it held up quite well. And Ether held up at the 1,700 level. So I am actually quite positive generally in the space. So as long as we we navigate the next couple of months well, I think I think the crypto space as a whole is in a good spot. The biggest risk, I think, to me actually is equities. So S&P it's drawn down about 20%. Could easily go down more, right? So if equities start to collapse, it will drag crypto along with it inevitably. So to me, that's actually the biggest concern. It's not a crypto concern. It's actually more of a big macro or rather equity concern.
Okay, thanks, Darius. So for Sohan, do you have some thoughts about these questions?
Yeah, I mean, look, I think I'm not a big macro trader or anything, but it just seems to me the big opportunity right now is whether you're bullish or bearish, like you should just be going and buying options, right? Because it's been less than a month since Luna, and Vol's basically like retraced almost all the way, right? I mean, it just doesn't. To me, it seems like a bit surprising that if you have a bullish view, right? Maybe don't go long a future, right? Like just go and buy a call spread. Like it's just a better implementation of your view than to go big long leverage and then get stopped out when it goes to 20K. So I mean, I think that's the only view that I have. I mean, it doesn't matter which direction it is. Just go buy an option.
Mm-hmm. Okay. So for Hao, so what do you think?
Can you repeat the question? So
the form meeting in June is coming about just less than 2 weeks. So what do you think the formal meeting will just have the influence on the crypto market and what we can do to avoid risks and just find some opportunities?
Frankly, I'm not sure how big the impact will be on crypto market. We're already in a stage of very depressing low vol and uneventful crypto situation. Like the crypto market at this stage is very pessimistic. I'm not sure how the macro environment is gonna translate into crypto landscape. Obviously, there is a positive correlation between crypto and the macro environment. But given the current situation, especially after the Luna incident and the current mood in the crypto market, I'm not sure how big the impact of the macroeconomics will translate into crypto markets. To be honest, I'm not sure.
Okay, thanks, Hao. And so, that's the ending of our AMA. And thank you to our guests, Sohan, Darius, and Hao. Thank you for your participating and sharing today. And we have learned a lot from your views and ideas. And this Bloomberg experience have also provided lots of inspiration for our community members. And in the future, we will hold more community activities, and if you have time, you're welcome to join to continue to participate in our space and share more. So as for the last, and you don't forget to join our growing community for more chances and trading experience. And the community link has been published on our Twitter and our YouTube channel. So it's here. And so thank you for everyone, and thank you for your time, and thank you for your participation. Have a good weekend.
Thank you, everybody. Bye-bye.
Bye.
Thank you. Have a nice weekend.